Hi, William Sheriff. I'm the Executive Chairman of enCore Energy Corp. We are dedicated to in situ production of uranium from sandstone uranium deposits in the United States. 100% focused on domestic energy market.
Bill, great to have you back on the show, and it's great for me to be speaking to you. It's been a while. Right, I've got to start with this. You have been, in the past couple of years, on the acquisition trail, made some acquisitions. Now, rumor has it that you've written down the value of Alta Mesa, $120 million you paid for that thing. Have you done that?
No, I'm afraid that's people that don't understand accounting, and I'm not an accountant, so I won't get into details. Our CFO can certainly do it, but essentially, when we bought Alta Mesa, it's not a single well field, it's not a single building, it's not. It comes with many things: 200,000 acres of mineral lease and mineral rights. It comes with plant and equipment. It comes with buildings, infrastructure, mineral resources, inventory, all sorts of things. And so the $120 million basically has to be spread out and allocated to various aspects of that, as opposed to a lump sum, as I understand it. Here again, with the key point of I'm not an accountant, but I'm sure our CFO would be glad to entertain those questions in detail. But no truth to the rumor.
Okay, I appreciate you addressing that. Okay, let's talk about the market has been fairly static, and spot price has been doing its thing. We've seen lots of companies sort of announcing term contracts, not particularly significant amounts yet, but the conversations are happening, trying to excite the market. The market said, we don't care. What does a company like you have to do to get noticed? You're a US company, which is right there on the back door of one of the hungriest countries in the world, and the US does not produce a lot of uranium. So how do you make yourself appealing in that environment?
No, in fact, that's the main reason we're here. The demand a year or two ago was 47 million pounds against roughly 100,000 produced from secondary means. So essentially we produce zero at the moment. We have installed and licensed capacity in the country from all of the different companies of about half of that. So there's going to be a problem, and that's why we see it as the biggest environment. What we need to do is execute, quite frankly. We've come in and we now own 30% of the production facilities in the U.S. We really aren't a miner. We're a uranium producer. We're much more akin to oil and gas. We do everything through pipes and plumbing and pumps. And, we don't really mine, so we don't view ourselves as that. And that's a real benefit in the U.S., quite frankly, because the investment community is a lot more open to oil and gas and alternative energy than they are per se mining. But if you look at our staff group and everything else, we look like a petroleum company with reservoir engineers, the same complement of people you would have in that sort of industry. So, but I think really the key is quite simple: execute. We've announced production plans. The first in the industry to really come out with solid production schedules. And not just one plant, but two. We're very blessed to have all three of our plants within about a 70-mile radius of where our operating headquarters are, and that's in Corpus Christi. So we get a lot of efficiencies of having everything in a very small area, as opposed to trying to do multiple operations in multiple states or even countries or even continents. So it's a difficult task, even with everything in a small area, but it's certainly one that we're up to and have the staff and people to deliver on that.
Right. So is this a case of being like the best of the rest? Because you've got the big producers like the Kazakhs, and I do want to talk to you about some of the shenanigans going on over there at the moment. Obviously, Cameco, up the road from you guys. It's a small sector with not that many. Well, so a lot of wannabe players and only a few people who potentially can get there, get into production. So your, I guess, big driver here is not about just getting into production, executing just to get into production. You've got to do that at scale. You've got to do that economically, and you got to be able to do that soon. So that's why I'm trying to say, what is this thing that you're building? So talking about executing is great, but executing what?
Well, we've got a path to meet our goal, and our goal is to be producing at a 3 million pound a year run rate, sometime in 3 years or so, and then ultimately 5 and beyond. We've, as you pointed out, been quite active in the M&A space. We still look to that. There's still a few opportunities out there, and obviously it's a very hectic time. taking them from the drawing board to reality. But here again, it's the experienced personnel on board that have done it. You bypass so much of the time delay in new production when you buy mature assets and develop those. Most of them have been built to modern standards. Some have been sitting idle. Well, most of them have been sitting idle for a number of years. So you've got to refurbish the plants. But here again, a fraction of the cost of building one, a very small fraction of the cost of building one, and you do away with the multiple years, 3 to 10 years or more in permitting. And everyone doesn't realize what permitting costs, but it's several $1 million a year in terms of your staff and your permitting effort. If you're dealing with the NRC, you actually pay the NRC, that being the Nuclear Regulatory Commission, you actually pay them for their time. It may be the only government agency in the U.S. that's self-funding, but it's one that you pay for the pleasure of them regulating you, and so it's quite costly. And by bypassing all of that and jumping into built facilities, existing resources with a quality team, it really enables us to unlock that strategy.
You want to see the fisheries department, right? So just sticking on these kind of pillars of how you build a company out, because ultimately it's about obviously clearly making money, not just for your shareholders, but for the company actually making money to give you options further down the line. So just sticking with the scale bit of that conversation. Yes, you've made some acquisitions, and yes, you've talked about some numbers, 3, maybe up to 5. But given the demand in the US for what you produce to feed into this kind of growing and burgeoning nuclear sector, what else can you do? Can you step outside of because you're ISR guys, that makes you a bit more akin to oil and gas, I get it. But can you do more M&A? When would you be able to do that? Is the market ready for that yet?
I think it's all a matter of opportunity, and the flesh being willing. It takes two parties to consummate a deal. All things are relative, so it's not necessarily a booming time in stock prices, but everyone's prices tend to boom at the same time. We have seen a bit of separating the wheat from the chaff, if you will. The likely near-term producers have fared better this year, relatively speaking. Hadn't been a banner year by any means, but relatively speaking, than some of the explorers, at least in the U.S. Arena. But I think the key really is two parties coming to an agreement. And then if you do, you can find a way to make it make sense economically. It's just a matter of, finding people that are aligned, that have aligned interests, and then you work around. Right now, valuations tend to all be relatively up or relatively down. So it's going to be unusual that you have a very high-priced currency with which to, enforce your will, if you will. So.
Right. But you know what I'm getting at, Bill, because we've seen a couple of companies in the shape of Denison, in the shape of UEC, in the past, let's say 2 years, make acquisition a priority for themselves. And it's kind of worked in terms of market cap and, at various points, share price too. And, it's given them scale. Now they're, predominantly, I guess, hard rock kind of guys. But it's given them status, and it's given them the ability to raise cheap capital to go and do acquisitions. Whether or not, when some of their projects will get into production is another conversation, another debate for another time. But what do you see as the kind of catalysts for growth? Because I get that we need two parties to agree, and that's always been thus, whatever the sector. But for you, how do you drive the growth here? Are you focused on actually delivering with what you've got and just, I guess, accretive growth rather than exponential?
Yeah, I mean, we're quite happy with organic growth inside. We can see those numbers based on our current portfolio, our current holdings. We talk about delivering. The first delivery will be getting into production this year in 23. That's what we said we would do the last half of 23, and generating some revenue, albeit small in 23. There will be some revenue generated. And then, right on the heels of that, a quarter or two later, first quarter of 04, we'll be, flipping the switch at Alta Mesa. In fact, we've already got drilling underway and that sort of thing. There've been a lot of, at least social media coverage in terms of what we've been doing out there. And, we're very aggressive. We've got, I think, 60 some employees at the current time. A number of rigs operating and just making great headway.
Okay. And again, what I'm trying to do is kind of paint a picture for people perhaps new to uranium and trying to work out who's here at the zoo, and also, get comfortable with their investment philosophy needs to match the kind of company that they could be looking at here. So that's why I'm kind of taking this out a little bit more, which is you've got a lot of companies have been doing a lot of talking over the last 3-4 years about how quickly they're getting into production and what price incentive they need to get into production, and that timeline gets pushed further and further out. I think more recently they've been able to blame COVID, supply chain issues, inflationary issues, etc. But they've gone a little bit quiet. So I would love to speak to them and talk to them about how do you actually advance that company forward? Was it ever likely at the rates they previously suggested that they would get into production? Economic production. You're saying your focus is we've got 2 assets we can get into production, and we're going to focus on that for now. And like old-fashioned business, we're here to make money, and then look at an additional M&A at some future point, but we're not discounting it. So there is ambition, I guess, is what I'm asking you.
I guess I would equate our operation more to a symphony orchestra. There's a lot of instruments being played, and the key is that we keep an eye on M&A, but it doesn't detract our group that's putting the actual assets into production and driving towards that. It's not the same people; it's separate people, and I tend to list the initial screening on M&A, and then of course Paul Goranson, our CEO, is intimately involved with it, but he's also intimately involved with overseeing the COO and getting the operations actually up and running. Having built the last few plants that have been in operation in the U.S. We've got more than our fair share of technical expertise, which allows us to do this and advance on multiple fronts. We're also working actively in South Dakota to deal with the permitting issues there. We're also establishing and initiating the permitting at the beginning of this year in Wyoming for our project there. So we're, as well as doing, amendments to some of the licenses in Texas to incorporate some satellite well fields into the existing production centers. And we've actually started looking at, possibly, increasing the production status at Rosita in terms of its capacity. One of the unique things in Texas, of course, is that we're able to increase our capacity simply by the addition of equipment. And not that that's a simple or cheap method, but it's a whole lot cheaper than going through several years of permitting to amend your permit to increase it. So depending on how our acquisitions go and how our ability to pick up deposits in Texas go, or promising lands, that'll dictate the rate of increase at Rosita. But here again, we're quite happy with executing on what we have, playing the hand we've got. At the same time, we keep our eyes open to, increase our lot in life at any time. Also, at the same time, we've got a whole bunch of non-core assets, probably, 40 or 50 of them. They don't show up in the website. They don't show up in the slide deck just because they aren't material, but they are of material value to others. And so that's, part of what we do as well. And I think do pretty well is rationalize, on some of those assets. I think we'll be on a clip of gaining, several $1 million a year by virtue of doing that, significant equity stakes in other companies by virtue of doing that, all of which strengthens the balance sheet. So,
but do you think the market's looking for this now in terms of fundamentals? Because there has been a lot of momentum play in this space for the last 3 years. Leverage was part of the game, and there was money available at certain points. Cheaper money was available at certain points. This kind of fundamental strategy for you guys, does it also mean that you feel you're expected to be a North American focused, North American producer, or can you look further afield? I mean, I'd love to talk about some geopolitics in a second, but in terms of, again, that ambition from you on ISR, where do you go?
I mean, we can, but we aren't going to, not in the foreseeable future. We see a lot of growth potential in the U.S. I would dare say we aren't done. I can't tell you when we'll be done. But you reach certain sizes and you're going to either become acquirers or the acquired, and or you're going to amalgamate with someone. And you can't be in that middle ground of market cap with revenue coming in and that sort of thing, and stay the size that several of the entities are in this business. So you're going to see future business combinations, and it may well be a year or two down the road, or it may be next week. I really can't tell you what others are thinking, but it's when it's opportune and when the winds are aligned, and you see mutual benefit in it. But it's going to happen. It has to happen. There's simply not much. And
it will, and always does. Let me talk about the next stage here. So I don't have much of your time here, which is look on the next kind of pillar, as it were, which has got to be about the economics of this thing. And clearly, ISR is one of the cheaper forms of mining for you guys. So you're going to be at that sort of lower end of the cost base. But you're also looking, and I noticed recently this acquisition of the PFN Technology to make your mining more effective in terms of being able to find this stuff quicker and more efficiently. So tell us about why you felt need to acquire it, because it's not a new technology, is it?
No, it's been around for quite a while. In fact, we purchased it from another company in the business, Energy Fuels. But the key is that it's a proprietary technology. And I guess the basis of it is understanding it. Typically, uranium exploration is done through gamma log reading. And you drop a detection device down the hole and you measure the amount of gamma that's coming out. And it gives you a good insight as to either where uranium has been or where it is. And what I mean by where it's been is it goes through decay processes where the radioactivity comes from, and you end up with daughter products. Those daughter products are not nearly as mobile as uranium, so you can actually have the uranium move on, as a roll front is generally dynamic moving force, although generally on a very small scale, but sometimes quite quickly. So you don't really know what the uranium is, and oftentimes you'll have to core it to find out your exact grade and wait on the chemical assays, much as you do for gold, copper, or anything else. And the ability to drop a probe down that actually directly detects the uranium. This actually emits fast neutrons. It activates and excites the uranium and nothing else. So you get a direct response that you can scale as to the exact quantity of uranium without having to core it, without having to go through the time delay of getting a chemical assay. So not only are you saving those costs of coring, because it's obviously a lot cheaper than coring, especially large diameter core, and the assaying, but the time involved there. And more importantly, you're not drilling nearly as many bad holes or duster holes, because these are relatively narrow roll fronts that we're drilling in this business in the U.S. And if you don't have real-time analysis in your drill rigs out there, you're going to drill some holes that, quote, look good and have good gamma kicks, but they may or may not have good uranium. And so you cut down on your drilling. You confine it to, you have a much better hit percentage, put it that way, with your drilling when you have this real-time availability.
Okay. And so that's from, you bought that 3.1 million off from Energy Fuels. They have 20 years to continue to use that technology and hardware. Okay. So just on that kind of like the economics side of things, you've been raising money in the market. You were back in December, $70 million, another 34.5 beginning of February. Obviously, you've had the acquisition of Alta Mesa, etc. How are you for cash right now?
We're good. We're tight to get to production. We don't have any extra, put it that way. But it's still on time, on budget. Certainly no excess. No large company retreats or anything along those lines this year. No extra opportune acquisitions, on the small scale. Typically, I pick up a number of projects that we throw in the non-core portfolio, and those have been delayed, but we are on track to meet our goal of production.
Okay, fine. So hopefully, no dilutive raising through to production. The production itself is going to be a ramp up. Do you have any other? So therefore, the revenue is going to be a sort of ramp up.
Yeah.
Do you have any other, in terms of your balance sheet at the moment, do you have any other kind of constraints on that? Or?
Well, I think the biggest constraint is the time delay you talk about in the ramp up. And, we're aware of that. We're also aware of the reality of the situation is, while everything's going smoothly right now, there's almost always some sort of hiccup, be it, a single widget's time delayed, or, the electrician's a couple of weeks late, or, there's all sorts of things. Like at Rosita, our well field's in. The plant's operational. We're putting the IX columns in. But there's still, plumbing and electrical and things that need to be done. So, you can't control all of those things. And I've been in the mining business, or in our case, we aren't a miner again, just as a reminder, we're pumps and fluids, a lot more akin to oil and gas. But I've seen very few projects, if any, go through without a little hiccup here or there. And I'd love to be the first, but if we don't, then, there are obviously a number of means to bridge that gap. If there is one, it'll be very, very small. So,
No, I hear you. I always say mining's tough. There's always bumps along the road. It's just how the companies, handle those, and the general trajectory is up. All good. Now, talk about learnings, right? I'm intrigued. We've got a big new audience of people new to uranium. I'm always keen to educate them or help educate them. I think most of them will kind of point back and they're being told this is just like before 2010, 2011, when, before pre-Fukushima, that kind of exponential kind of growth period, lots of new companies coming into the space, price was driven up. Do you think that's true? Is this kind of like, pre-Fukushima times? Are there lessons to be learned from that?
Well, I think there are lessons to be learned from it, but aside from the commodity, I'm afraid I'm going to dissent from the audience, or at least from the peer group, somewhat considerably, in that we don't see the system to set up a dynamic, moonshot, as I've seen on some of the references. We see a very good growth market that's developed for the future. We see a real solid outperforming growth in the nuclear sector, both from conventional as well as the additional small modular reactors. And that's what we're basing it on, and even more focused on the U.S., where the deficit between supply and demand is the biggest. It's a completely different set of factors, and I'll just highlight a few of them. In the 04 to 08 period, where you saw that huge move from teens to 140, over a very short period of time. We were saying they were involved with it, building Energy Metals at the time. Paul Goranson was busy with Mustania actually setting those spot prices through auctioning off small lots of uranium. But if you go back, that whole scenario set up in 2003 with the flood at McArthur River. And that was biggest mine, highest grade. That got people's attention. And then you had 3 floods at Cigar Lake. It's commonly referenced there were 2, but there were actually 3, which was supposed to be the answer to all the supply problems as a new mine coming on. And then in 2007, Ranger flooded in Australia due to cyclones. And basically a pit filled up and made a giant swimming pool. All of these things are fixable, but they all happened at the same time. So we had a perfect storm, if you will, of supply interruptions. Add to that Rossing, the big mine in Namibia. RTZ was running in, and at the time they said it had reached its mined out stage and they'd be closing it down in 2007. Well, since it's still running now and they've just extended the forecast, obviously that was short-sighted and incorrect, but nonetheless, that was the prevailing attitude at the time. And they were suffering a major health crisis with their workers. So their production was down and the mine was going to close. So really a perfect storm of supply, some contracts going into force majeure. It's hard to tell exactly what percentage of that spike in price was actually nuclear utility buyers in the spot market. Certainly some, as they were worried about their near-term contracts being in force majeure. But here again, the hedge funds and the financial players smelled blood in the water and jumped right in. And, I think probably a good guess as any is maybe $70 or $80 was done by the utilities, and the last 40 to 60 of it was done somewhere in that vicinity by the financial players. As with any of those perfect storms, those situations abate, return to a situation normal. And I'll point out a huge factor. At the time, we still had significant headwinds from the press and from public opinion towards nuclear. We were not a popular industry. And then, of course, Fukushima put the death nail in it for a decade of darkness, as I call it. Gave us a lot of time to. We were started this company right before that, so we were fortunate enough to fund ourselves to survive it, and had 10 years to plan our future. But you compare and contrast that to the media now. A little over a year ago, there was an issue that you may recall that was on some of the press for about 30 seconds about fuel rods deteriorating in Chinese reactors. And it got no traction at all. The simple fact was that EDF had to come in and shut it down and deal with the fuel rod issue. But it was a normal maintenance thing, whereas 10 years earlier, or 5 years earlier, the press would have made it into a Jane Fonda sequel. And we would have had a real nightmare scenario. And even recently in the U.S., we've had a plant in Minnesota with a tritium leak that they did not shut down initially, made a little paragraph blurb in some of the news, and they thought they'd fixed it, and then it reoccurred. And here again, virtually nothing mentioned in the press. They had to shut it down to get in and fix it. Here again, these are routine interruptions, but the press would have treated those as if the world were coming to an end back 10 years ago or 5 years ago even. So the press is ignoring the minor issues when they're minor, and most of them are. They've certainly overinflated some of the potential crises of the Europe's biggest plant in the Ukraine. I don't think either side there really wants to see another nuclear disaster, seeing as how both sides were the ones that suffered from, the biggest disaster ever in Chernobyl. So, and even that the press had a little bit of fun with for a few days, but they, that blew over as well. And I think that's the biggest sign of really the sea change in terms of how people view the nuclear industry. And, I often say it's not the perfect solution, but it's the best one we've got. And, fusion is probably 30 years off from becoming realistic alternative. And, I'd point out that 1970 or 80, it was 30 years off from being realistic and commercial. And in 30 years, it may well still be 30 years. It seems to always be 30 years from realization. So I feel quite confident for the next few decades that what we've got is simply a resumption of the pre-3 Mile Island growth curve for nuclear power. In essence, take the 44 years since then and throw it out the window, and we're picking up where we left off. Unfortunately, during that hiatus, we lost an awful lot of talent that has not been replaced, a lot of ground lost. Last real exploration boom was in the 80s, and in the U.S. in particular. And so we're starting from behind. But it does give us an awful lot of fertile ground in this industry.
We have lost a lot of talent, bizarrely from places all around the world, like South Africa had a burgeoning nuclear industry, and now they've found themselves supplying arms to Russia instead, allegedly. Look, I jest. What I want to talk to you about, they want to stick on that point with regards to, okay, if it wasn't like, if you don't say it's not quite like, 2004, 2008, are there other aspects of it where there perhaps are similarities? Because again, we saw a lot of chat about a year ago. We're heading for, $200 uranium. That hasn't materialized, clearly hasn't materialized. But we did see, and it was off the back of conversations with parallels to, 2004, 2008, or 2010, quite frankly, where, uranium got to 140. It shot up there. People are expecting it all to behave the same way. So for the reasons that you've just outlined, you don't think there will be price appreciation like that anytime soon? Or do you think there are other factors which may drive that, like it moving towards a supplier's market?
Black swan events are hard to see coming, right? But at the same time, the only one that's somewhat predictable that I see out there is the Ukrainian situation. Whether Biden cuts whether Putin cuts off the West or vice versa, that would have an impact, and I think it'd be significant, but I don't think it's going to take it anywhere near $100. For one thing, we've been talking about it for a year. And now we've got through one of the subcommittees in the House in the U.S. just yesterday, as a matter of fact, or the day before. So now it goes to the full committee on a ban for Russian uranium. However, it has a few asterisks in it. And there are always exceptions and always a timeline to these things. And don't forget the nuclear utilities have a lot bigger lobbying budget than the uranium business does.
But don't you think Putin's kind of foreseeing this? Like, because Europe was having those conversations 2 months ago, and what seems to have happened in recent days is Putin's going to go, "Oh, you're going to ban our stuff, but you want it for now until you find a solution. But you're going to ban us. Tell you what, I'll deal with that right now. I'm going to turn east and do a deal with China," which seems to be what's happening. Right? A lot of people, apparently, senior management leaving the upper echelons of the Kazatomprom, which is obviously the Kazakh operation, nothing to do with Russia, I'm sure. And then Russia obviously doing the same thing with their products. So it clearly signals a bifurcation in the marketplace. Clearly signifies that that's coming down the line. What's that going to do for uranium juniors, do you think? Clearly, obviously, should be a good thing, but does that accelerate that inevitability?
I think so, and I think I'm one of the, I guess I wouldn't say lone, but one of the few voices out there that think and I don't know what time frame, whether it's 5 years, 10 years, or what have you, but we will see a time at which none of the Kazakh production goes west. You've started to see some real major events line up over the course of the last year, starting with the summit last October and between Putin, Xi, and the leader Nazarbayev of Kazakhstan. I'm sure I mispronounced that, but anyway, the three of them met in Kazakhstan. Shortly thereafter, the Chinese and Kazakhstan basically fell out of the Russian sphere of influence and migrated a significant direction towards the Chinese sphere of influence. And then it was only a month or two after that Cameco came out and announced that future production from enCore was going to China, not to the West. And I think that was a major foretelling sign that a lot of people didn't pay a lot of attention to. So I think that Kazakhstan is going to become less and less available to the West, and just in general. Now, maybe not this year, maybe not next, but at some point I think that's the trend. I think China certainly would like to see that trend, and they're doing what they can now to ensure that. So I think that's the case. But getting back to your, how do we deal with the pricing? I think we've just got a very, very strong, compelling growth story, somewhat independent of the general economy. If you have a nuclear reactor, you're going to fuel it. It's pretty simple. And if you look around the world, the new builds are considerable. Even taking China out of the picture, the new builds are significant. And then you add China, which is an incredible prediction of growth. Then it explains why they want all the uranium as well. So I think we're going to have a very vibrant, stellar period of growth that exceeds any of the current UXC or trade tech forecasts.
Yeah, well, okay. Well, like I say, it's interesting times with Tokayev and Xi Jinping meeting up. I think that's driving the kind of, or continuing to drive the kind of geopolitics of this narrative. You and guys like you in the US need to worry about your own business and how you actually get into production, how you actually drive that revenue, and how you time those term contracts, etc. Because I think it's what people will be looking for. Let's go kind of full circle back to my first question here, which was obviously you set the record straight around any write-off on Alta Mesa, okay? But do you think the market's been very, let me say, fluid, shall I say? It's been very, very lots of bumps along the road for everyone. Would you have dealt with or paid for any of your acquisitions differently? Looking back, hindsight's a wonderful thing. Would you have dealt with it differently, negotiated any differently, and does that kind of advise the way you're going to look forward when you do get to future M&A?
Yeah, one of them was a lot more difficult in terms of actually doing than I would prefer. Probably the most difficult one I've done. And I think in my career I've done 27 or 28 of them, most of which have been a good idea. One or two weren't. But I don't think there are any of the deals we would have done differently. I think we might have put more constraints on our terms on one instance. But in terms of Alta Mesa, it was, I think we got a bargain. I wouldn't do anything differently. I think it was a great acquisition. Yeah, remember, we paid $120 million for it. And I'd been carried on a number of the brokerage firms as 250, 240 NAV. And when you can get a premier asset that's multi-decade in terms of its longevity, which we believe it is. I mean, only 10% of the identified roll fronts have been drilled on anything other than fences. So, I mean, our upside is going to be quite considerable there, we think. And just the existing resources is sufficient for a decade of operation. Plus, a rather large scalable plant in the best jurisdiction and the lowest cost jurisdiction in the U.S. I mean, don't forget in Texas, we don't have to bury our plumbing. We don't have to insulate our wells. We don't have to have insulated header houses. We don't have to dig holes and bury all of that. We don't have to dig it up when we're done for reclamation. We don't have to fill the ditches in once we're done. So, there's some basic cost differences that favor Texas. And, when we go to Wyoming, South Dakota, we're going to be like everybody else. We're going to have those cost increases in terms of our base cost of production. we aren't immune from it. It's nothing magic. It's just the weather.
Okay, well, let's say how everything kind of pans out in the world of uranium over the next with the rest of this year. Like I say, coiled like a tight spring as ever. But we hope there's a reaction in the equities market soon across the board, but especially uranium. Bill Sheriff, appreciate your time today. Thank you.
Thank you.